Hey traders, Jeffrey here. I hope you are having a great weekend after a pretty spectacular week. As I said a number of times in the Telegram room, that Japanese yen really was a killer for us. So let's do a quick review of how we did, review a few other things, and take a look at what we can expect going ahead on the week ahead. And remember, if you are looking at this video, maybe on the YouTube channel or on the free Telegram channel, you can go to strategicdaytraders.com and get some more information, find out about the special offers. You can email me directly if you're interested or have any questions in becoming a member of our private Telegram channel, where I give my trades, signals, additional information, and we'll be expanding that to weekly signals as well as gold signals, and even a heads up on what's going on with the indexes in the morning, and my analysis of the particular news events. As always, all the information provided here is for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or forex. So this is what we had last week. As you can see, we had 5 days of signals, lots of trades. I try to be ultra selective, but when I review and do my analysis, I'm looking at a variety of factors. What the banks are doing, the amount of positions that they are currently holding, where I see them needing to liquidate for a profit, where I see them manipulating the market in order to gain profits, as well as overall currency strength, and the commitment of traders. All of that stuff factors together. And this is what we had going into the week, on Monday, Tuesday, Wednesday, Sunday night's trades, Monday, Tuesday, Wednesday, and Thursday. Trades released between 6 and 8 p.m. Eastern time. I'm on the East Coast in the U.S., and I start doing my analysis when the market closes, to get it out to you before the Asian markets open, okay? Asian, first Sydney, and then the Asian or Tokyo markets begin to start to move. I'd like to take a look and try to get positions in before the London market opens and follow those London markets. So we had great winners and a positive day. These are sample amount or profits or losses based on very safe, small 0.1 lot sizes. Here's what you could have done if you had a half of a full lot. And if you're just starting out, you can easily trade 0.01 lot sizes. So you can see you'd have only made a few bucks through the week each of these days, but that's still a good way to get started with real dollars and cents and not risk a whole lot, okay? And I will show you on one of the charts in a few minutes how I really try to mitigate my risk. I hate to see anything in the red. So we were in the green completely. Positive results all the way through, as we had massive moves in the market, as I said, because of the yen. Thursday going into Friday. Friday can be always a little bit slower and tricky, so it really was a flat day. We took a tiny bit of a loss after a full week. Let me just move over here. After a full week of profits in the green, a tiny loss on Friday for a net positive for just a tenth of a full lot size, or a micro lot of 1,000 total, for very little work on your part, entering and watching your trades, your stops, your targets, and potentially moving your stop losses to what I'll show you in a couple of minutes, the way that I do. Or if you wanted to take a little bit more risk, let's say you're in a prop account, go ahead and take a look at a half a lot, or you can do any multiples of these, okay? And as we get a little deeper into it, and all of you get a little bit more experience, I will actually show you how I use lot sizing based on the individual currency pairs that we're trading and the dollars and cents per pip that they each result. So that's how we did through this week. And as I said, as an example of a chart, This was one of the ones that we lost a few pips on. So I just wanted you to see what I actually do. Let's say, as I mentioned, here is our entry point. This was 7:30 p.m. on Thursday, July 25th, okay? I actually had an initial high probability target right around here for a short. So we took a few pips off of the table here, but then the market did turn around on us. And as you can see, we were in a steady down market. We had a little bit of a retracement, came back down, and the market was either going to tank and go all the way down for a huge winner, but in this case, we did have a reversal, okay? Now, what I always do is I like to follow price action. If you can see this right here, change of character, okay? Change of character, break of structure, change of character. When we have a change of character on a 15-minute chart, then I'm not going to take a chance that we're going to move back down again. I am using this to get out, okay? So in this case, getting out and moving my stop down to this change of character is going to prevent me from any potential greater loss. In fact, it went up quite a bit, and it retraced a tiny bit, but I still wouldn't have wanted to take any of this loss. We have enough positive winning trades every week not to try to risk anything, so I'm going to cut my risk down to a minimum. So that is what I'm looking at. Our initial stop loss is really based on multiples of ATR, and then I am looking for actual price action trades to gauge my my trading stop losses. Those of you that have been following me for a while have heard me and seen me teach price action. We'll do a session on it here where we're looking for higher highs, higher lows, and when we break structure and change character, that's when we know we can safely get out or safely stay in a trade. All right, so we'll go ahead and do that, and in a couple of days, I think in the Telegram room, I'll try to get a little bit of feedback when the best time for some weekly sessions are. I'm thinking of potentially on Wednesdays around the same time every week to do a session and take comments from all of you on what you'd like to hear about, and we'll begin teaching some regular topics that you're all familiar with to some extent or want to know more about. Now, looking ahead for the week, this is going to be a monumental week coming up, okay? Huge volatility expected, okay? We have both inflation information and interest rate information from not only the U.S., but a couple of the European and global countries as well. So on Monday is going to be kind of slow. No news is coming out, and we'll be careful to see whether or not things are pretty flat when we take a look at the potential trades later on. But right now, going into Tuesday, and this is all U.S. East Coast time zone results, so modify these results on your own computer for your own time zone. But Tuesday, 9:30 p.m., Australian inflation data, okay? And then Japanese interest rate information, okay? We have heard some rumors about the Bank of Japan doing a drop. We're not sure yet, okay? Then we've got inflation data for the Eurozone, okay? Wednesday, huge day, U.S. U.S. inflation and, U.S. FOMC interest rate decision. The Fed is meeting Tuesday and Wednesday, and they're going to release interest rates. We do not expect a drop in interest rates this time. We do expect it the next time. 2, potentially 3 drops as well, because we're starting to see some good data coming out. But even though we don't expect an interest rate drop this particular time, we always wait and look for the press release comments by Chairman Powell to give an indication of what is going to happen. Okay, so the market is extremely interested on what's going to happen. How does all of this affect our currency pairs? Obviously, any move in interest rates or suggestion of when and how much they're going to be moving will affect the U.S. dollar. U.S. dollar is a part of every single one of our major currency pairs, okay? So we're very tuned into that. And then on Thursday, We've got the Bank of England releasing its interest rate results, okay, anticipating a drop right over here. So we'll look for this to actually match up with what the expectation is. And then beginning of the month, back to the U.S., we have our non-farm payrolls, which is our big payroll and unemployment rate results coming in. In the face of the U.S. election and employment rates and interest rates coming up, multiply everything tenfold, okay? So we expect some extreme volatility this week. I will be ultra careful, okay? So we might have a little bit of trickiness in analyzing, but that's what I love doing. So as you guys know, that's my passion, and I look forward to getting those signals out to you in the Telegram channel. If you have any questions, feel free to email me. It's a pleasure doing this with you guys. So that's a wrap for what we did last week, what we're expecting in the week going ahead, and I will see you in the Telegram channel and on the recap videos. See you in the next one.